Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is October the 1st, 2012. I've got several charts I want to look at today. I've updated it on, actually got a couple of charts I've already issued buy signals on earlier last week, and now we've got a couple more that I would be a buyer of at this point in time. Starting off with the Dow Jones Industrial Average, talked about this one last week, told you had a hammer candlestick formation off the middle Bollinger Band line, while the ultimate oscillator was bouncing off of the 30 line or oversold situation there. So that was something we were keeping an eye on, looking for confirmation, and we got that today. So I'll be a buyer of this situation here, and that would make a lot of sense to me. Stop will be set off this candlestick's low, the hammer candlestick's low, 13,367.27, so 1 cent below. That would be what the stop loss limit is, at least what the strategy would be if you're not obviously capable of buying the Dow Jones Industrial Average. But whatever you're trading, whenever you're looking at these kind of charts, what you're going to be doing is looking at the low point, and then if it breaks down from that point, then there's a question of the actual trend. Maybe it's breaking down further in many different ways that that could be interpreted, but the main thing is to keep an eye on the low point that you're marking. In this case here, and we're going to see this in a lot of other charts as well, let's say for some reason the market were tomorrow get some kind of bad news and gap down and then just sell off and break out here, closing below this actual stop loss limit. What would I do? Would I all of a sudden be bearish? No, because the overall trend is still up. You still have this high point here and a higher high here, a low point here, and still a higher low. I would be looking at this still as being looking for buy opportunities. I would actually get more interested the closer it got to the 50-day moving average. We're talking about that a lot today, so I want you to start paying attention to the 50-day moving average. Whenever you're in an uptrend, I've mentioned this several times, whenever you're in an uptrend, you typically find support at the 50-day moving average. And the closer you get to that and get your buy opportunity there, that's where you want it. That's what the best quality opportunities are. So keep that in mind. Gold has now closed above our upward trend line that we talked about in the past. We had drawn this little channel right here. We've closed above that, and that was the last signal I told you that we're looking for would be the confirmation buy signal. I'd be a buyer of gold with the stop set off the previous low, this hammer candlestick formation right here. I will advance this stop as soon as we start moving higher. You start advancing from this point, I'll start to eliminate risk and lock in gains. But for now, I'll leave the stop where it is and just let it continue to move higher. Silver doesn't track it just yet. We'll look at that in a moment. But the main thing I'm looking at here is if gold and silver are starting to break to the upside, and you've seen the same thing with oil and gas and days, which you can see on our free website at PerfectStockAlert.com. All of our charts are kept there. All of my charts are kept there, so you can see all my notations. But you're starting to see several of these charts breaking out, moving to the upside. So when I'm starting to see reversal signals in the averages, like the Dow Jones Industrial Average, things of that nature, of course I'm going to be looking for those as buy signals. If everything else is starting to move higher because of the Fed, then of course I would be continuing to trade with the uptrend. Quick little glance here at the NASDAQ. This one was actually down today, giving us a split market. We had the Dow Jones was up and the NASDAQ was down. A lot of that has to do with the fact that Apple was down roughly 1% today. However, I'd like to point out, if you go look at the Apple chart, you will see that price activity is now trading really close to the 50-day moving average, which is where you want to be looking for your buy opportunities in an uptrend. So I would argue in that scenario that actually what you're looking at is the end of this sell-off, not the beginning of it. The XOI oil index has now closed above our downtrend line that we were talking about. Looking for that is actually being the confirmation of the buy signal. That has happened. We've closed above that point there, or at least on it. And in that case, you would be looking at that as being confirmation and be a buyer with the stop set off the low. That would be at this point right here. Again, note where your 50-day moving average is. Note where you find support at. And then again, go out and find yourself situations where you can buy close to the 50-day moving average. The SPX, or the S&P 500 Large Cap Index, I've also see a buy signal there. I know there's other people out there who will look at this differently. Let me show you what I'm looking at. I'm looking at the fact that we are clearly in an uptrend going like this, and we have the Fed behind us saying, okay, I'm going to cause markets to rally just because I'm going to devalue the dollar. So you know that that's going to add strength to that trend. And I'm also noticing that we have the other way you can analyze it, simply look at the direction of the 50-day moving average or the direction of the 200-day moving average. You want to trade in the direction of those two moving averages because they tell you which direction the actual market is moving, and that is clearly up here. So in all those cases, I'm looking at this as being, I want to look for buy opportunities, not sell opportunities. There are others out there who argue the opposite side, and they say that no, that we've peaked and we're going to break down and sell off. It's possible. I can be wrong. It's not impossible. It's rare, but it's not impossible. One of the things I'm looking at is this move here is being the first leg down, and then you're seeing this little bear flag formation here. That's what they're looking at. However, I would disagree with that. I would say that this is just a small maneuver here. If you were to actually move lower, you would simply take this first leg and duplicate it on the second. So you'd be actually breaking down to where? The 50-day moving average, where I would only go buy again. So again, I'm just looking for buy opportunities in this market because you're clearly in an uptrend. The silver chart I've marked as a buy, actually ahead of the breakout. We haven't actually seen a breakout here like we see in gold. However, the argument that gold can rally and break out and silver then wouldn't is kind of flawed, because it's all based on the fact that the Fed's devaluing the dollar. Ergo, if gold breaks out, so will silver. So the buy would be there. The stop would be at the 33.36 point there. 1 cent below that, that's where my stop would initially start at. And then as she started to move higher, I would advance the stop to eliminate risk and lock in a gain. Finally, today we're going to be looking at the VIX, the Volatility Index, which runs the inverse or the opposite of the S&P 500. When the S&P 500 is in a bullish uptrend, the VIX should be in a bearish downtrend. When you find situations where you got support being formed on the 50-day moving average on the S&P 500, you'll be looking for the VIX to provide resistance at the 50-day moving average. So that's just the inverse relationship you need to keep in mind there. Now, looking at the VIX, I want to show you what I'm looking at here. You've got a clearly defined downtrend. We've been doing this for a while here. But I want to note, where did you find great short opportunities? Well, you're going to find them in the case of the VIX whenever they're above the 50-day moving average. So here, you're going to get it here, again here, and you could have maybe done one here, but I missed that one, here as well, and then we're there again. One more thing to note. Whenever you're looking at this and you see the chart activity that you see today, the price activity, you can see that we have a hammer candlestick formation. It means one thing if it's at the bottom of after a major sell-off. If you've had a major sell-off and then you get a hammer candlestick formation, it means one thing. If you've advanced and then you get one, it means something completely different. It's a hanging man candlestick formation. It's not a good sign. Here you get a pullback, then you get a bounce up here. Hanging man candlestick formation is not strength, it is weakness, and she falls away. In this particular case here, they're very difficult to short because I like to keep a tight stop. So let's say that you decide, okay, I see this hanging man, I'm going to short it. So you set your stop off of this point right here. The following day, intraday activity stops you out and then breaks down anyway. That's the problem with trying to short a hanging man candlestick formation, and that's why I don't have a sell signal here, because it would be very difficult to do that. If I could, in this case over here, you could have simply said, okay, I'm going to short here with the stop the previous high. It's not that far away, and then I would just keep a tight stop, moving it lower as you went along the way. That would be fine. Here, we really can't do that. If we were to say, okay, I'm going to keep it short here, you'd have to set a stop right here, which is, again, pretty easy to break out of that intraday, and I'm not willing to set my stop way up here and then get short at this point. It's just too much risk on the table and not a lot of downside potential at this particular point. So that's why I'm not messing with it. Also, I'm already looking at the S&P 500 marking and saying I would buy that. So if that is the case, then why would I go sell the VIX? It's exactly the same trade, basically. So there's no sense in doing both. I will be updating the European market charts on the website at perfectstockalert.com in I don't know, about an hour. You can check them out there if you'd like. Also join us on our community forum there and let us know what you think. Got any questions? We'll help you figure them out. Lots of smart investors and traders there. All we're doing there is looking to help each other learn more. Okay, that's it. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.